Hey everybody, this is Ryan Mallory with the Stock Market Bubble Update. Plus a little kicker, we're going to throw in, should I buy the Tesla stock now? Is this the right time to be buying the dip on Tesla and some of these other stocks? We're going to tackle all of that and more. It was a wild week on Wall Street, man. You had a lot of pops, you had a lot of drops, you had GameStop trying to get back into the picture until they weren't. You still had crypto at the forefront of all of this madness, and you got another stimulus package working its way through Congress. Monday gave us the biggest rally since June of last year, followed by 3 consecutive days of massive selling. We got the volume back on the rise, and then we have another sell-off on Friday, but it quickly reversed. We saw another 120 points off of the lows, back to the highs of the day. It was pure madness. But when you get these kind of crazy moves, it's not indicative of a bull market. It's usually indicative of something far worse, something that signals correction in the market. And it was a mixed week on Wall Street. You had the S&P 500, the only index that rallied. It was up 0.8% on the week. We don't care about the Dow, so I don't talk about the Dow. I don't include it in any of my analysis. You had the Nasdaq, it was down 2.1%. And you had the Russell, it continued its 3-week slide down 0.3%. You still had technology that was leading the way lower with discretionary right on its heels. You had small caps selling off as well, but by not as much. Next week, you're going to see a lot of talk about the stimulus, its impact on the stocks. Are we going to see these $1,400 checks that are getting ready to go out come right back into the market again? Because that's what we got in 2020. A lot of people were YOLOing their stimmy checks right back into the market, and we may see a little bit more of that once again. And before I get into the charts, let me tell you real quick about the YouTube channel membership. Really cool feature that goes along with my channel here, and that's going to provide you with all the market research that I do each and every day. It's going to be sent to you right here on this channel. You're going to get all of my stock market updates, including updates on the S&P 500, the Nasdaq, and the Russell multiple times each week. Plus, you're going to get all the FANG stock updates that includes Facebook, Apple, Amazon, Netflix, Google, Microsoft, and Tesla. And you're going to get my master watch list updates for both bullish stocks that I like and bearish stocks that I'm following, as well as the daily setups that I'm looking at possibly trading each and every day. So you're going to get that. You're going to get the most intriguing charts that I come across. Check it all out. It's down below. Click the join button and find out more. Now, remember that rising channel on the S&P 500. I've been highlighting it for months now. Well, it finally broke. And it broke on Thursday, but on Friday it quickly reclaimed that with that major reversal off of the lows. But on the hourly chart, it is much more pronounced because you have a major dip below it. And then yes, you had the significant rally that ended the day on Friday that allowed it to recapture that trend line. But this isn't like a little break that we saw in January, February of this year. This was much more pronounced, much steeper of a break. And despite the rally, it still has a series of lower highs and lower lows. So we need to see this little trend line off of the February highs get broken so that it can resume the uptrend back to new all-time highs and beyond. Yeah. You also have the 50-day moving average. Price is desperately trying to cling to this, just like it did back in February. And so far it's working. But the candles that we saw on Monday and Friday were very similar, especially the price action preceding those candles. You'll notice there was a big sell-off the previous day, and then you have this bullish kicker. And a bullish kicker is simply where you have a steep sell-off followed by a gap higher that sees the opening price above the previous day's open. And that's what you have pretty much on Monday of this past week and on Friday. But what happened afterwards is the big question. Well, on Monday when we got it, we had a steep 3-day sell-off that shook a lot of people, caused a lot of people to panic sell. And right now we're still in that downtrend, so there's a very good chance that come next week that this rally that we saw at the close will suck in a lot of buyers, but it'll ultimately fail. But if we do get the follow-through, this is what you want. You want to see that declining trend line that I just mentioned. It needs to break because right now that's causing a lot of resistance. So if we get the follow-through on Monday, it needs to push through that declining resistance level there. Now, I want you to go back in time with me and revisit the S&P 500 chart from March of 2020. The one thing that we saw was the difficulty to maintain these bounces. And every time we got one of these big bounces, it sucked a lot of traders in to get long, and then it completely collapsed on them and it sold off even further and far greater than what anybody would have actually expected. So you'll notice you have March 10th, similar candle to what we saw on Friday and Monday of this past week. You have that from March 10th. You have that from March 13th of last year. These were very intriguing candles that made people think there was a bottom end, and instead it would just completely fall apart the following day. When you look at this time period, there was tons of pops and drops. And while the pops were pretty significant, the drops were far more severe. And so you would find yourself chasing the price action higher and then get that rug pulled out from underneath you the following day. So you want to be careful that you're not chasing every one of these rallies that we're seeing right now in the market over the past 3 weeks, because we're seeing a lot of the same tendencies from the market that we saw back in March of 2000, where every good rally would eventually get sold. So when you see like the kind of price action that you saw back in March where you could not string together a 2-day rally at all, it makes it to where next week in the stock market is very, very crucial to get that follow through to the upside and to break that declining trend line off of the February highs. Because otherwise we're just getting these massive emotional bounces that are indicative of a bearish market. Now check out the Nasdaq 100 because there is a lot of volume starting to pour into this market here. A lot of panics. When you get a massive year-long rally like what we've seen off of the March lows, and then all of a sudden out of nowhere, the volume starts increasing as the market's going down, that tells you there's a lot of panic selling going on right now. Is it capitulation to where a bottom's put in? No clue. But it's not a market that you want to trust right now because like the S&P 500, these could just be dead cat bounces. And the steepness of this sell-off is far greater. At one point on Friday, we were down 12%. That puts us in correction territory. Now we're only down 8% off of the highs. Now it's still pretty significant, but not anywhere near where we were at the lows of the day. Nonetheless, the declining trend line is steep and it's got to be respected and it's not broken yet. It needs to put in a higher high, which it hasn't done yet, by breaking the March 2nd highs. And in doing so, it'll also break that declining trend line off of the February highs. Now, one of the more intriguing aspects of the chart is the fact that it found some key support going back to October and November. It found it, and that's where it actually bounced at. So that is a key marker going forward. If we're going to see some more selling next week, we need to see whether or not the lows from this past week is going to hold, because if it doesn't, it's going to be breaking a key support level that has now been highlighted by the Nasdaq. Now, time for Tesla, because that's probably what you're watching this video for the most. Check this out. Rising channel. I've been talking about this on the YouTube membership channel for months now. You have this rising channel that continues to go higher. It broke out above it. I mentioned before, it's going to have a hard time sustaining this move outside of the channel. Most stocks do. It's not anything to pick on Tesla here. It's just a matter of technical analysis that says stocks cannot usually maintain these kinds of massive breakouts where they get this parabolic like it did back in January, because when it does, it'll ultimately have a massive pullback as well. And that's what we've seen. This thing was trading at $900. It traded down into the lower 500s this past week. But what's cool about it is that I had been mentioning, hey, this rising trend line is going to be a key level of support going forward. It tested it and it bounced significantly. Now, the big concern is that you're seeing a lot of sell-offs in the solars. You're seeing a lot of sell-offs in the electric vehicles like NIO, and Tesla's doing the same thing. There's nothing different about Tesla in that regard. They're all selling off. And if the market continues to see a bloodbath, this thing's going to sell off even further. This is going to be one of the main targets for the short sellers and for people looking to book profits. They're going to panic sell out of Tesla. Now, I got to look at what is the worst case scenario for Tesla. It could go as far as like $200. Now, I know that's like a huge shock for a lot of you guys, and you're going to vehemently disagree with me. And I'm not even saying that it's going to get down there. I'm, again, telling you what is the worst case scenario if this market continues to sell off. I would perceive it to be around $200. Now, I'm probably going to get a lot of down thumbs on this video for it. I don't care, guys. That's fine. I'm not here to provide you what you want to hear. I'm not here to provide you confirmation bias. I'm here to provide you what you need to hear. It's kind of like the Dark Knight. I'm the hero that you need. But there's also a support level in between, and that's around 476. If it continues to sell off, there is some key support at the 476. It lines up nicely with the 200-day moving average. Also, there is a trend line going back to May that also coincides with it. So there's like 3 different support levels right there that it could test and provide a decent amount of support going forward. Again, you're not going to like the idea of it going down to 476 if you're still long. That's why I'm always preaching, hey, don't get married to your stocks. Always have a stop loss, always have a line in the sand, always know where you're going to get out before you ever get into a trade. And you got to do that even with the superstars like Tesla. Because look, if the 10-year yield continues to rise, that's going to have a huge impact on Tesla. It's going to cause a lot of additional selling. It's going to hit the market really hard. It's going to hit discretionary. It's going to hit tech, all of which influences the Tesla stock. And so, yes, if that continues to happen and the market does crash, then you're looking at a potential price in the 200s for Tesla. And a lot of you guys saying that could never happen. Well, you also said this past week that 500 probably would never happen, and look where we're at. Again, I want you guys to succeed in the stock market. I want you to do your best. That's why I put these videos out. And if you like this video, I'd encourage you to like and subscribe. It helps me out tremendously to continue to put out new content each and every week. And tell me in the comments below, are you still long in Tesla? Is there something else that you're putting your money towards? How does this market have you feeling? Let me know all about that. Thank you guys, and God bless. Next week in the stock market.